What is up, Party Rental people? This is Justin from Party Rental Knowledge. I have Alex Casio from Casio Insurance here. We did a video, it was an hour long about insurance. So this one is just going to be about liability insurance, give you the information and the basics, a little bit more than the basics, but just liability insurance. Try and keep it short and sweet and give you that value. Alex, take it away.
I appreciate you having me back, Justin. Like you said, my name is Alex Cosio with Cosio Insurance. We've been in the party rental industry for quite some time now. We had a few different programs with a few different carriers, just trying to find ways that we can make you guys a safer operator. So happy to be here. Happy to share some information with you guys. And if you have any questions, you can always reach out to us directly. I'm pretty active on the Facebook forums. So if you can reach me there or email, website, whatever it takes, we're happy to help you guys.
There's a link to the Facebook group in the description here too. Take it away, Alex.
All right. Well, so everybody asks about what they need to get started as an operator. It's probably one of the most commonly asked questions that I have to answer. Is what do I need to get started? What is required versus what is nice to have? One thing that we always tell everybody is that the one policy that if you operate at a school or a church, or you have a customer asking to set up in a park, they're going to ask you for a copy of your liability insurance and also to be named as an additional insured on your policy. So off the top, you already know that you need to have the general liability coverage just to operate in those areas. We have quite a few people that come to us that have just started their business. They've only been doing backyard parties for the last 6, 7, 8 months, just trying to test out the waters, but they're trying to make it more of a legitimate business. If you've been operating without insurance, we highly recommend that you don't do that because you could potentially be opening yourself up to personal liability if, God forbid, something happens and somebody sues you for it. If you don't have insurance, you're going to be paying for the defense out of your own pocket, much less the actual damages that if they take you to court and they say, hey, this was negligence on your part, here's what you have to pay. If you don't have insurance, that's coming out of your own pocket. If your business is in your personal name, coming after your house, coming after your retirement, your cars, all that good stuff. So separate that stuff from yourself personally, start an LLC, go through the proper channels to get everything going on the front side. Start with insurance, even getting the rental software so that we can track your sales, which ultimately is what we need to get you a quote for your insurance. So, the liability coverage is, like I said, based on your projected sales for the year. I know you guys have just started out, you're having a hard time coming up with an estimate. Figure out how many units you have, how many times you expect it to be rented out over the next 12 months, back into a number. With COVID, we automatically understand that it's going to be a little bit tougher to project those numbers, but come up with a range. What's your best case scenario? What's your worst case scenario? And figure you should probably, as a first year operator, you should be on that lower end of the spectrum anyways. These policies are audited. So they're going to come back and check in with you either quarterly or at the end of the policy period and say, what did you actually do? You projected to do 10, but you ended up doing 25. So what they'll end up doing is charging you for the difference of that $15,000 times the rate that you were charged at the beginning of the policy period. So it's not like it doubles, but it's the same rate that you were charged per $1,000.
So here's a quick question. So now if you overpay, do you get money back? Like, say you overestimate. So say that I think I'm going to do 50K this year and I only do 40. Do you get part of that 10K back?
No.
Exactly. So now if you were to underestimate, isn't there a little bit of a premium for underestimating on that? So say you said you'd only going to gross 40K, but then you gross the 50K. Don't you pay a little bit extra on that 10K?
No, there's no penalty for underestimating it. They're just going to charge you.
Some places do that, but you guys don't.
Yeah, that's what I've heard. So, the way the policies are written is very important. So if it's a minimum and deposit, that means that, the minimum and deposit means that you're signing up to pay for that premium. There's a minimum premium that you pay at the beginning, and then you pay out the rest over the policy period. So if you do less than what you projected, you're not going to get any of that money back. So most of the policies are structured that way. That's pretty much a standard across the industry. COVID was a huge issue for a lot of these companies. They didn't know how to handle that, especially on such a widespread basis. So, have a little bit of patience with the industry. They're trying to catch up. Everybody was looking at, the auto and home insurance industry and thinking it was going to operate the same way, and it didn't. People were having a hard time getting money back. So, we always recommend that if you're especially starting out, be a little bit more conservative, because again, if you do go over that projected sales, they're going to get their money from you. So, help yourself out. Don't put that you're going to do 100,000 as a first year business, because ultimately you could potentially be shooting yourself in the foot. So, come up with a range. Like I said, best case, worst case scenario, trend more towards the conservative side. So that way you guys aren't overpaying for your insurance throughout the year. We don't want to have that issue come up. I mean, it's tough. We
But
definitely had a lot of
also,
people.
don't take advantage of it, because if you start putting 30K on there and you're grossing 100K a year,
Right.
That's when people are like, okay, well, now we're going to have to start charging you for doing all
Right.
that extra mess around stuff. So
Mhm.
the more you mess
Yeah.
around as a owner, the more the insurance companies have to fight back and mess around with you with more rules and regulations.
Right. And they're not idiots. They know when people have $100,000 worth of equipment and they're saying they're only going to do 30,000 in sales, like they know it's not going to fly. So they know that they need to get their money on the front side. There's a range. I'm assuming that they'd come up with that calculation and say, hey, look, this makes sense. You're operating in Florida, a state like that, we can pretty much operate year round. There's no reason why you should have this much inventory and only be doing 30,000 in sales. It just doesn't add up. So, like I said, you need to have the ability to track your sales. That's a huge component of your insurance, because that's how everything's going to be based on. So get the rental software, take that off your plate, because when you do the audits, they're going to want to know, hey, what was your total sales? All right, now break down your sales. All right, how much came from inflatables? How much came from tables and chairs? How much came from tents or concessions equipment? Did you have a mechanical bull? How much came from that unit? So if you have a system like that where you can break it down, it's going to make the process so much easier for you, because the underwriters are going to ask for that information anyway.
Yeah, that's awesome.
Yeah.
So that's how liability insurance is priced.
That's how it's priced.
But what does liability insurance cover?
So liability insurance is going to be for property damage or bodily injury that somebody alleges, says, hey, this was your fault, you were negligent in some way. And it's on the person who's bringing this lawsuit to you to prove that you were somehow negligent in order to get that money. And the issue with the industry that we're in, we deal with a lot of minors. We've had other situations where the paperwork wasn't filled out all the way. They didn't get the rental agreement signed, or they didn't have a waiver. So when the insurance company's in that position, they're looking at it from a standpoint of, okay, well, you paid $3,000 a year for your insurance. This claim could potentially be $100,000 plus, but they want to settle for 30 or 40. So we're going to go ahead and do that. And once that happens, your insurance is going to go up moving forward. But the insurance company, they're trying to cut bait and get out of it, paying as little as possible. So, the biggest thing that you can do to help yourself out is to try to avoid having a liability claim in the first place. And you do that with a participant accident policy. So you use that as your first line of defense to help pay for medical bills, because that's, for the most part, that's what people are looking for. Most people these days have a high deductible healthcare plan. So, with being January right now, they probably haven't hit that deductible yet, and they have a significant amount that would come out of pocket if they did have to take their kid to the ER, go to the, ride in an ambulance for some other reason. So being proactive with that, being involved with the claims process, asking the customers, hey, when you go to pick up the equipment, hey, how did everything go? Did everything go well? And they say, oh, it went well. We loved the unit, but we had a kid that got hurt in the bounce house. He had to go to the doctor. At that point, you can offer to pay for the medical bills and say, hey, I'm so sorry that happened. We have an accident policy. It'll pay up to $25,000. It's above and beyond what your insurance has. So if they go and they get the bill back, it says that they owe $1,200, you're just paying the $1,200. You don't have to pay the full medical bill. But the kicker there is that if they're uninsured and they don't have health insurance, and that's one of the reasons why they're like, oh man, I have a $30,000 medical bill now, I'm going to come back and say, oh, I'm going to try to sue you and say that this was your fault somehow. So that's why I use the accident policy first as that buffer and say, hey, look, we'll get out in front of it. It's no fault coverage, so they don't have to prove that you were negligent in any way. You just make sure that they go to the doctor within 90 days of the accident and get that first medical bill, and that's what starts the clock for the policy. So be heavily involved with that kind of stuff. Don't wait and sit there and get into a staring contest with somebody over, hey, well, you signed a waiver, so I'm scot-free. I don't have anything to worry about. Don't do that, because if you wait for that attorney's letter, at that point, it's no longer an accident claim. It's a liability claim. So don't let it get to that point. Be proactive. Offer them that accident policy when you find out that somebody was injured on the equipment. And the other thing, too, is that if you have an accident claim, it doesn't impact your liability rates whatsoever. So use that accident policy, man. It's there for a reason. We want
I
to
like
protect the liability as much as possible.
I like how you were saying the one time in the last video, you said literally that's per person per event too.
Per person per covered accident. Yeah. So it's, if you have 10 kids in a bounce house and, for whatever reason something happens and they all get hurt in the bounce house, it's per person in that unit. So it's not like there's some sort of cap. And, even if you used the full $25,000 limit for that one accident, you still have the rest of the policy period that's going to be covered if somebody else gets hurt, and they're covered for up to $25,000. So, and it's not just the that initial bill that they incur if they have to go to rehab or something throughout the year. That benefit period is going to be for the full 52-week period once the date of the accident starts. So that's why we're like, hey, it's a full spectrum here, and a lot of times with lawsuits, a lot of times they wait until a year or two later down the road because they have a full trail of medical bills that they've accumulated, and that's when you get that attorney letter in the mail. And if you're not proactive with it and you don't offer the accident coverage, like I said, once you get an attorney letter, it's no longer an accident claim. That's a liability claim. So you guys have to be involved on the front side. Let your insurance agent know. You can always call your insurance agent and say, hey, we had somebody get injured. We have a signed rental agreement. They signed the rules list. We didn't think that we were negligent in any way, but they're looking at us saying, hey, what can you do to help me? And you can look at like a superhero because you're saying, hey, we have an accident policy that will take care of you in this situation. You don't have to worry about the out-of-pocket costs. We're so sorry it happened. Just make sure that you get us the medical bills, and we'll take care of it for you. So that way you're not potentially losing a future customer. You're looking, like I said, a superhero, and you're taking care of them, and they're going to come back to you again. It's probably more important to me than the liability coverage is to make sure that you use the accident policy and actually know how it works.
Yeah, I think there's a statistic too. A lot of people don't sue to try and get rich or make money. They sue because they're broke and they need to pay bills, and suddenly now they're in debt over an accident because they had bad financial situations to begin with. So they go contact a lawyer, and the lawyer's like, "Oh, well, bounce house company, I can pick at this. They're pretty easy because it's very it's a susceptible market."
Right. And that's the problem is, when you go to a birthday party, a backyard birthday party, and your kid gets hurt there, it's supposed to be on the homeowner's insurance policy. The person who's hosting that party, they have a homeowner's policy for that. But they don't want to file a lawsuit against, little Timmy's best friend because they're all friends together. So they're not going to go after his policy. Then they come to you because you're the business owner and you have $1 million policy. And, that's unfortunately how the world is kind of going. So, for especially all you guys in Florida, New York, those are some of the worst states, California even, some
I'm
of the
in New York
for that. So you understand, people are always looking for a way to.
It's just they want to sue
fault.
you. It's funny too. So, and this is one of the reasons I have the channel. So I have the Facebook group, the YouTube channel too. Like and subscribe, but it's here to make you people start doing safer things and start making our industry look better and better. Because it's unfortunate as this seems, like we can all have an amazing year, and then one person screws it up and their bounce house hits some power lines, and then suddenly the whole industry looks bad. It's the thing. But if that person had insurance and then everything was strapped down and accidents happen, then that's what liability is there for.
Right. Exactly. Yep.
So
you have the insurance there for a reason. It's there for defense costs. It's not supposed to be something that you use, but it's there if you need it. And, waivers are great. Obviously the insurance companies require you to have a waiver, but they don't protect you from being sued. Anybody could file a lawsuit for any reason. That's your right as an American. So, whether or not they actually get anything out of it is another story. So that's why you have to make sure you get all your documentation, you have your rental agreement signed, you get them to sign those safety rules or checklists on, you understand how to operate the unit, I understand what I'm not supposed to do. Have that done every single time, and it'll help you guys out as far as defending you if you ever do come across an injury like that.
Appreciate you for being on here today, Alex. We're going to do some more videos on other insurance things and try and break everything down. We did a whole hour video that was just everything you need to know about pretty much bounce house insurance. And now we're going to start trying to break them down piece by piece to give you some more valuable content that you don't got to sit there for an hour to watch. So have a good one, everybody. Enjoy and stay safe.